Namaste, good morning. Let us start with understanding of association of person and its taxation. AOP and its taxation. In our understanding of firm, which we were doing for past three classes, our holistic approach has been firms separately, partners separately. The only aspect is the maximum permissible remuneration. Otherwise, firm is taxable separately and partners taxable separately. When we go to companies also, the taxation will never be dependent on the directors. The taxation there will not be dependent on the directors. That is different. This is different. But in the case of AOP alone, the entity's taxation depends on the members' taxation. The entity and members are so interrelated that the taxation of the entity is to a larger extent dependent on the taxation of the members. So that is why AOP assessment is going to be little different from all other types, and in fact it's very detailed in law. What are all the special provisions? How tax of AOP and tax of members are computed is what we are going to see in this chapter.
Sir, just sorry to interrupt. This is the PDF, sir. Can you send it on WhatsApp?
I don't understand.
The PDF, sir.
It is in the form itself.
Oh. Okay, sir. Sorry. There are only questions with the handout.
Okay, page number 6, bro, the last one.
Okay.
Theory will be in the first part.
Got it, sir. Thank you. Sorry.
Okay, right. Okay. The importance of this chapter is computation of income, rates of taxation applicable, because this is to a larger extent dependent on the rates of members. Okay, they are interrelated. Okay, right. There is one section in our PGBP chapter which is devoted to assessment of AOP-BOI. If you look here, 40B, interest and remuneration to partners in the case of firm. And interestingly, 40BA, interest and remuneration to members in case of AOP. The term AOP includes BOI, don't worry. Interest and remuneration to members of AOP. That is what we are going to see here. In simple words, not allowable. A AOP cannot pay, repeating, an AOP cannot pay interest or remuneration to partners, to members. And AOP, so it is not complicated like 40B, 12% interest on capital, remuneration up to 3 lakhs and more than 3 lakhs, like that it is not going to be there. An AOP cannot pay remuneration or interest to, cannot pay under income tax law, it will be disallowed. Even if you pay, even if the deed authorizes, under income tax law, interest on capital and remuneration to members are disallowed. But unfortunately, please understand, the law says interest and remuneration to members are disallowed. Under 40BA, the law says interest and remuneration to members are disallowed. An AOP pay interest on loan taken from members? Can an AOP pay interest on loan taken from members?
Yes, sir.
Then why will anybody give capital? Everybody will give loan.
Oh, members, sorry. I read it as relatives.
Please understand, like what we studied there in partnership firm, even the interest on loan provided by partners is restricted to 12%. Why? Because if you have that as fair market value bank rate, then everybody will bring it as loan, not as capital. Applying the same logic, when interest and remunerations are disallowed, the same logic holds here also. Even interest on loan cannot be paid to partners, paid to members. Okay, even that is disallowed. Okay, disallowed. Even this is disallowed. However, as our friend has been saying now, as we always understand, okay, however, interest to relatives of members and interest in a different capacity are allowed subject to 40A2 provisions. Okay, interest to relatives, interest to members, the interest to members in a different capacity, representative capacity. These are these are allowed subject to the provisions of payment as per the fair market value. Now that is what here. Any payment of interest, remember it is any interest, salary, commission, bonus or remuneration made by an AOP or BIA to its members will not be allowed as deduction. Where any interest is paid to members and the members are also paying interest. So there is an income, there is an expenditure. The members paying is an income, we paying is an expenditure. Where any interest is paid to members and the members are also paying interest, then net interest shall be disallowed. Income minus expenditure or expenditure minus income. Where an individual is a member in a representative capacity, then interest paid to such individual in such representative capacity will be disallowed, whereas interest paid in his individual capacity will be allowed. Vice versa also. If you are a member in individual capacity, that will be disallowed. Whereas if I pay you interest, that's what we have been understanding. Any type of interest is disallowed. Any type of interest is disallowed. 40B is the only section which speaks about AOP BOI. Otherwise, the general provisions are applicable. Otherwise, the general provisions are applicable. What is that? The next is rates of taxation. I mean, all other general provisions are applicable. Then the next special case is rates of taxation for AOP BOI. Rates of taxation. Before progressing into this, the first time you are going to listen to a concept called what is maximum marginal rate. Okay, popularly MMR. What is maximum marginal rate? Maximum of every part of taxation. Maximum of every part of taxation. Base rate. What is the maximum base rate? What is the maximum base rate?
30%.
60%, sir.
30%.
60.
Base rate. 60 is 115. It is not coming under normal tax slabs.
Okay.
What is the maximum surcharge?
37%.
37% into 37%. Okay, into 37%. There is a singular HEC rate of 4%. There is only a singular, there is no multiple. Therefore, MMR is 42.644. Therefore, MMR is, my dear friends, actually MMR is 42.744. 42.744. Maximum marginal rate you should understand to understand the tax rates applicable for AOP. 42.744 is MMR. Okay, right? So 42.744. It is the maximum of every part of tax, the maximum base rate, maximum surcharge, HEC. So it totals up to 42.744. Okay, now patiently understand. One time understanding and we are clear. The tax rate for an AOP is directly in relation to the tax of members. I told you it is intricate. Tax rates pertaining to members. Okay, you can listen, that's enough. Depends on tax of members, where members' shares are determined. This is very important. Where members' shares are determined. That is, you know the ratio of sharing of members. At what ratio they share the profits is known to you. Where the shares of members are certain, determined. Only individuals are members and the income of such individuals does not exceed basic exemption limit. Please listen, that's enough now. Individuals are only members and none of the individual has taxable income. Repeating, only individuals are members and income of such individuals does not exceed basic exemption limit before any income from AOP. So it is before any income. Exclude the AOP income and look at it. None of the individuals has income exceeding basic exemption limit. AOP is taxable slab rates. AOP is taxable at up to 250, 250 to 5 lakhs, 5 lakhs to 10 lakhs, more than 10 lakhs. AOP is taxable at slab rates. The crucial part is share of profit of members is taxable in their hands. You listen, that is enough for me now. Where members of an AOP, where the total income of members does not exceed basic exemption limit. Basic exemption limit is for individuals, so it is understood. Income of such AOP BOI will be taxable at rates applicable to individuals. Slab rates. At rates applicable to individual. Remember, share of profit of members will become taxable in the hands of the members. Okay, I'll come to that. I'll come to that. Where members have income which is taxable more than basic exemption limit. AOP is taxable at MMR. If even one of the member has income which exceeds basic exemption limit, which means he has taxable income, then the whole income of AOP is taxable at MMR. What is MMR? You all know. The whole income of AOP is taxable under MMR. Share of profit is exempt. In the last case, share of profit becomes taxable. In this case, share of profit becomes exempt. All these things are when the shares of members are determined. Okay. Where any member has income which exceeds 30% taxation, where any of the member, where one of the member is taxable at a rate more than 30%, normally base rate 30%. If any of the member has income taxable more than 30%, that means foreign company. That means foreign company is a member where any of the member has income taxable, okay, which exceeds 30% taxation, nothing but foreign company is a member. Then look at this, just understand. Share of such member is taxable at such higher rate. share of profit of such member is taxable at such higher rate. Other income is taxable at MMR. Other incomes are taxable at MMR. Share of profit is exempt in the hands of members. In this case also, share of profit is exempt. First, I will take up where share of profit is the rates of taxation of AOP is closely related to the rate of tax or income level of members. Where the total income of the member does not exceed BEL, income of such AOP will be taxable at slab rates. Where the total income of any member exceeds basic exemption limit. Even one member exceeding basic exemption limit, AOP BOI is taxable at maximum marginal rate. Okay, AOP BOI is taxable at maximum marginal rate. This has an exception also. However, where the total income of a member is taxable at a rate higher than MMR, which means foreign company being member, then income attributable to such person will be taxable at such higher rate and the balance at MMR. Read these two things.
Sir, a doubt, sir.
Kellinga.
Sir, in the first case, when the total income of the member does not exceed basic exemption limit, means it means the rates are applicable to individual. That means they don't have to pay tax.
I'll come to members little later.
Okay.
For example, okay. For example, since you asked this doubt, okay. AOP consists of Antonio, Sriram, and Venkatesh as members. Okay. Income of Antonio before share of profit 2,30,000. Income of Sriram before share of profit. Okay, 2,40,000. Income of Venkatesh before share of profit 2,50,000. None of the members has income before share of profit exceeding basic exemption limit. Okay, in this case AOP is taxable at rates for individual, that is slab rate. In this case, AOP is taxable at rates applicable for individuals. In this case, suppose in the same example, I take it as, okay, let us take Venkatesh is having his income as 6 lakhs. one of the member, not all, even if one of the member is having income at taxable at a rate, he is having taxable income, AOP is taxable at MMR. AOP is taxable at MMR. Now, the one other difference here is, okay, share of profit taxable, whereas here, okay, share of profit is exempt.
Sir, like foreign company, do an example for foreign company also, sir.
Yeah. AOP consists of Venkatesh, X Limited, Indian company, X Incorporation, a German company. Let us have this as circumstance. Okay. Now, share equally. Okay. Share equally. Income of AOP is now, let us take 10 lakhs. Income of AOP is now 10 lakhs. The profit of AOP is 10 lakhs. Share of profit of X Incorporation, okay, 10 lakhs into 1 by 3, okay, 10 lakhs into 1 by 3, okay, right, 10 lakhs divided by 3, this will be taxable at 40% plus 4% HEC. This 3,33,333 is taxable at 41 point some percentage.
Okay.
Balance income, that is 10 lakhs minus this amount, is taxable at MMR.
Oh.
Is taxable at MMR. Share of the law says, however, where the total income of a man is taxable at higher than MMR, then the income attributable to such income will be taxable at such higher rate and the balance at MMR.
Okay.
Here I should have written, sorry, plus 7% plus 4%.
Okay, sir.
This is the whole entire thing is share of profit is determined. We know how the members share their profit. We know how the members share their profit. Suppose there is a case where share of profit are not determined. Okay, where it is a case of share of profit are not determined. Because when we started firm, we said what is a firm? 3 conditions. Return deed, share of profit should be specified, deed should be filed. If any of these things fail, it will not be treated as a firm, it will be treated as an AOP. So, share of profit are not determined. AOP taxable at MMR. Whole of the income is taxable at MMR. Where AOP has a member who is taxable at a rate, higher than MMR, then whole of the income is taxable at such higher rate. Why? Because I don't know the share of that member. Share of members not determined. Share of members not determined. So I don't know the tax rate of such member. So the whole income of AOP, I will keep taxing it at a higher rate. Indirectly, I am forcing the AOP to clearly say what is the share of members. Otherwise, every year they will tax plan. This year, this member's income is lower, so let him take. Next year, this member has a loss, so let him take. Like that, they will be apportioning. So I am very clear. If your share of profit is not determined, I am taxing you at MMR. If an assessee is, if one member of your AOP is taxable at a rate higher than MMR, then the whole income of AOP will be taxable at such higher rate. Okay. Where the individual shares of members are unknown, indetermined. Whole of the income of AOP is taxable at MMR. However, if the total income of any member is taxable at a rate higher than MMR, then the whole income is taxable at such higher rate. Read through.
Sir, in first case, even all the members are below basic exemption limit, the AOP is taxable under MMR.
Which means in this case, that is indetermined.
Yes, indeterminate
Yeah.
case. Okay.
Sir, can you go back to the example where there was one individual and two companies? One was a foreign company. Yeah, X and X Inc. In this case, the individual member Venkatesh, how will he be taxed, sir?
Why should he be taxed? When the AOP is taxed at MMR, the individual shares of members are exempt.
Okay, sir. Sir, also one more thing. Can you go to the first example? You had written the notes. Even above this, sir. Yes. Where member shares are determined and the first case is only individuals are members. Here, is it only individuals? It can also be an Indian company.
Yes, companies have basic exemption limit.
Oh, okay.
That
No,
is
sir.
an interpretation of law by which we understand if they are meaning individuals.
Yeah, okay, sir.
Repeating some point, AOP consists of members. Each of them does not have taxable income. So AOP is taxable at rates applicable for individuals. Share of profit is taxable. His share of profit is taxable. Please understand. Go slow and understand. Suppose if AOP's income is 25 lakhs, this would have been taxed at slab rates. This would have been taxed at slab rates. Okay, so how much I will arrive at that tax? This will be like this. 25 lakhs minus 10 lakhs into 30% plus 1,12,500. Okay, add HEC at the rate of 4%. Total tax of AOP will be this amount. Total tax of AOP will be this amount, 5,85,000. Okay, okay. Keep this on one side. Now, share of profit of individual members. Antonio, already he has an income of 2,30,000 before distribution, total income. Okay, let us take as equal partners. Now he will get 25 lakhs divided by 3. 8,33,000. His total income will be 10,63,000. Remember, share of profit is taxable. Share of profit is taxable. For Sriram, in the same manner. For Venkatesh, in the same manner. Okay? For Venkatesh, 250. For Sriram, 240. Okay? And their share of profit being the same. Okay? So, this will also be taxable in their hands. This is why it is dually taxed. Once the firm, the AOP has paid tax for that. And second, the individual members are also paying tax for that. Okay? Repeating, AOP has already paid a tax for that. Individual members are also paying tax for this. So came a concept called rebate under 101. Rebate. Sorry, relief under 101. Rebate, sorry, rebate. Rebate under 101. What is the rebate? What is the rebate? Okay. Average tax on doubly taxed income. Average tax on doubly taxed income. These three things are doubly taxed. Once in the hands of AOP, another time in the hands of the members. Average tax on doubly taxed income. Average tax is equal to total tax divided by total income into 100 to convert it into a percentile. Repeating, taxability of share of profit of members. 110, I wrote it as 101, I'm sorry. Where AOP is taxable at MMR, members share is exempt, no problem. Where AOP is taxable at rates applicable for individuals. When will AOP be taxable at a rate applicable for individuals?
When their income before AOP is lesser than basic exemption limit.
Share of members is taxable. However, rebate under section 110 can be claimed. I wrote it as 101. Sorry. Where AOP is not taxed, share of members is wholly taxed. How to compute the rebate? Where the share of profit is AOP is taxable in the hands of the member, that will arise if the AOP is paying tax at rates applicable for individuals. Then rebates needs to be provided. Average tax into such share of income. Average tax is equal to total tax divided by total income into 100. There is an in-between part of distribution which I will explain you. As of now, read it. Leaving this particular part of distribution, please read it. Please read it once.
Sir, can you show your Excel for a minute? Sir, the rebate is given to the AOP.
No, individual members. Who is debited? Individual members only. Not only here, this formula later you will see in international taxation, DTAA, double taxation avoidance agreement. A similar formula you will read.
Sir, in this case, rather than giving a rebate, why did we even tax the individual members once again for that AOP income, AOP share of profits?
You mean to say why are we taxing it twice?
Yes, sir.
Because the government takes revenue out of it.
So it's clearly a double taxation, but I will give you a rebate, so I will tax you.
Yeah, it is clearly a case of double taxation, no doubt about it.
Sir,
Listen.
won't mutual association come and fall under AOP?
Not necessarily. Not necessarily. They will be cooperatives. If it is a mutual association, it is not taxable. We have already seen the conditions for calling an association as a mutual association.
Thank you, sir.
JK Associates is an AOP consisting of two members, J and K, sharing 60:40. So the members' shares are determined and they are individual. Income of the AOP is 9 lakhs. Compute the tax liability of AOP and the members in the following situation. J and K have their other income other than AOP amounting to 1 lakh and 2,50,000 respectively. Case 2. J and K's income other than AOP's income amount to 3.5 lakhs and 7.3 lakhs respectively. Read through, we will work out. the income of J and K is lesser than basic exemption limit, because in the first case they say J has an income of 1 lakh and K has an income of 2,50,000. Okay. Hence, AOP is taxable at rates applicable for individuals, or you can even call it as slab rates. Total income of AOP. Total income of AOP 9 lakhs. Total income of AOP 9 lakhs. Base tax, my dear friends, 9 lakhs minus 5 lakhs into 20% plus 12,500. 4 lakhs into 20%. First 250 nil, next 250, 12,500, 5%. And HEC at the rate of 4%. Total tax payable by AOP. Since the individual members are taxable at a rate or are not having taxable income, AOP is taxable at the rate applicable for individuals, slab rates. I'm going to the part 2 of the question for members. First understand, then take your pen and write it down. First understand. Okay. Particulars. Mr. J. Mr. A. First, let us understand. Then we will take it out. Income before share of profit 1 lakh, 2,50,000. Share of profit of AOP, they are sharing in the ratio of 60:40. They are sharing in the ratio of 60 for J, 40 for K. So total is 9 lakhs. For J, it will be 9 lakhs into 60%. For K, it will be 9 lakhs into 40%.
Sir, it should be profit, no? Not income.
Sir,
it should be 96,200 and other than sir. Share of profit.
Tax, Raja.
Sorry, sir. Okay. Sorry, sir.
This is the income. Total income $640, $610. First, listen. We can take it down. I'll give you time because understanding, one understanding, it's over. Base tax. Please understand. 6,40,000 minus 5 lakhs into 20% plus 12,500. 1,40,000 into 20%. 1,40,000 into 20% plus 12,500. Similarly, 1,10,000 into 20%. 1,10,000 into 20% plus 12,500. Oh, stand corrected. Stand corrected. Less rebate under section 110. Less rebate under section 110. Less rebate under section 110. What is the rebate? Average tax on dually taxable income. Average tax is equal to total tax divided by total income into 100. Total tax 40,500 divided by 6,40,000 into 100 will give me a percentage, into dually taxed income is 5,40,000. This is the dually taxed income. So please understand once more, total tax, okay, total tax 40,500 divided by total income into 100. This will give me the percentage of taxation. This will give me the percentage of taxation. Okay, 5,40,000 into 6.33 percentage is the rebate I can enjoy. Is the rebate I can enjoy. Is the rebate I can enjoy. Similarly here, 34,500 divided by 6,10,000 into 100 will give me the percentile into 3,60,000 is the dually taxable income. Repeating, total tax divided by total income into 100 will give me the percentage of my rebate. You will give me the percentage of my rebate. Rebate will be 3,60,000 into 5.66 percentage. Rebate will be this amount. Okay. And HEC at the rate of 4%. Normally, these assessees are not liable to pay any tax. Normally, these assessees are not liable because 1 lakh is only their income. 1 lakh to 50 are their income. But because of dual taxation, they are now liable to pay taxes. They are not now liable to pay taxes. Please take it neatly. Just give me a minute also. Please take it down neatly. Friends, I was little unsure. I stand corrected that I made a mistake. Okay, the wordings should have been relief. but allow me to correct the mistake, please. I'm sorry. Allow me to correct the mistake, please. Okay. I'm just taking the answer. If you have written the answer, please strike it off and please redo it. Okay. Add HEC at 4%. Okay. This is the mistake I did. Okay. This is the mistake. I'm just correcting the mistake. Okay. Total tax. Okay. That's why I just verified the material ones to understand how they are worked out. Okay. This is the total tax. This is the total tax, my dear friends. This is the total tax. 1 minute, I will correct all the errors and then you can take it down. Okay, rebate under 110 will be 42,120. 42,120 divided by 6,40,000 into 100 into 540. Here it will be 35,880 divided by 6,10,000. Okay, divided by 6,10,000. Here I should have taken the total tax as not as with after it is D22, that is 42,120 into divided by 6,40,000 as a percentage. It comes to 6.58. It comes to 6.58 and 5,40,000. Here also it is It is not E19. It is E22. That is 35,880. So the rebate slightly changes. Okay. I had added the HEC later. No, I just verified. That's why I was little confused with regard to that rebate and relief. I'm sorry. Okay, so that's why I just want to confirm. This is how it has to be worked. Please change your answers.
Sir, just the last line, the subtraction, just the formula, can you check, sir? It has to be subtracted from total tax rate. Yeah, that's it.
Thanks.
Yeah, correct. Thank you.
So the concept is where before including AOP's income, members doesn't have income exceeding basic exemption limit, then the AOP is taxable at rates applicable for individuals. The AOP would have paid 96,200. But the problem is share of profit of members, okay, is taxable. Why? Because AOP has paid a lesser tax. Tax rates applicable for individuals. I am taxing it. But I know for this 5,40,000 and this 3,60,000, it is already tax suffered. This 540 and 360 is already tax suffered. I am dually taxing them. So I am ready to provide a rebate. I am ready to provide a rebate. What is the percentile of rebate? It is computed as a formula. Total tax divided by total income into 100. That will give me a percentage into dually taxed income. Dually taxed income is nothing but share of profit of AOP or BOL. There is a part B to this question. J and K's income other than AOP amounted to 350 and 7,30,000 respectively. Okay. Where income of J and K exceeds basic exemption limit. Even if one of them exceeds also, it is fine. This is 3,50,000 and K is 7,30,000. Hence, AOP is taxable at MMR. Hence, AOP is taxable at maximum marginal rate. Okay. Base tax at 30%. Base tax at 30%. And surcharge at 37%. Surcharge at 37%. And HEC at 4% of tax plus surcharge. HEC of 4% on tax plus surcharge. Okay. Total tax payable by AOP. Total tax payable by AOP is 3,84,696. AOP itself is taxable at a higher rate. AOP itself is taxable at a higher rate. Now what happens? Individual shares of members will not become taxable. Individual shares of members will not become taxable. J and K will be, okay, 3,50,000 and 7,30,000. This will be exempt. Okay, this will be exempt. So this will not be taxable. This will be exempt. It will not be taxable. So total income Okay, 350 and 730. Base tax 350 minus 2,50,000 into 5%, and here it will be 7,30,000 minus 5 lakhs into 20% plus 12,500. 2,30,000 into 20% plus 12,500 less rebate under section 87A. Less rebate under section 87A. Okay, this is where I got confused. There also they use the word rebate, so I thought it is before HEC, but I had a doubt in my mind. They normally use the word relief. If the word relief is used, it is after HEC. If the word rebate is used, it is before HEC. But anyhow, okay, rebate under only for Mr. J as his total income has not exceeded 5 lakhs. Rebate will be actual tax or rupees 12,500, whichever is less. In this case, 5,000 is rebate. And HEC at the rate of 4%. Tax payable for this man, for J it is nil. For A it will be patiently take on. So this is how taxes work. If the share of members are determined, but the members are individuals who does not have basic exemption limit where it is taxed, and if the members' shares are determined, but the members have a taxable income, AOP taxable at MMR.
Sir, I have one doubt.
Yeah.
When we are looking at partnership, assessment of partnership firms, we did not see any cases where the partners are being taxed for their share of profit from the partnership, because the partnership firm itself is taxed for that share of profit. So here it is being taxed, however, even if they are under the basic exemption limit, their share of profit from AOP is also being taxed. Is the law trying to say that you better do partnership and not an AOP, or why are we bringing?
Yeah. My answer to you is your overall understanding is only one place you are wrong. I understand your question. In the case of partnership firm, if the partners are not having taxable income other than remuneration in interest, it is not that the firm is taxable at a lesser rate. firm's income is right from rupee 1 taxable at 30%. There is nothing called basic exemption limit applicable for a firm. Whereas in the case of AOP, if none of the members have basic exemption limit, I am taxing the AOP itself at a lesser rate. I am taxing the AOP itself as at a lesser rate of our rates applicable to individuals up to 250 nil, 250 to 5 lakh 5%, 10%, and I mean 20%, and then only 30%. So they have that benefit. Since I am giving the benefit to AOP, I am taxing the individual members. Whereas when the AOP is taxable at a higher rate, I am not taxing. In partnership, at least share of profit is also exempt, provided AOP is taxable at a higher rate. So by that I am not making them, forcing them to make it as a firm.
Okay, sir. Thank you.
Now, question number 25. Prakash is a member in 2 AOPs. AOP and Co. Prakash and Akash provides the following details of his income. Provides the following details of his income for the year ended 31st March 22. AOP and Co. is assessed at normal rates of tax and has credited its account 210 as interest, 496 as salary, and 20,000 as share of profit. A house property located at Jaipur, purchased in 2011 with a borrowed capital in Prakash and Akash, jointly shared equally and occupied by both of them for self-residential purpose. Total interest on 21-22 on the borrowed capital is 410. Compute the income and the tax liability for assessment year 22-23. Support your answer with a brief reason of the provision. Read through. Very interesting aspect of this question is house property which was purchased with a borrowed capital. Prakash and Akash jointly shared equally. Prakash and Akash jointly shared equally the self-occupied property. Can each of them claim 2 lakhs as deduction? That is, for a self-occupied property, section 24B restricts the interest to 2 lakhs, the claim of interest to 2 lakhs. Can each of them claim 2 lakhs or only totally 2 lakhs can be claimed? This leads us to some of the case laws. We will understand the case law, come back and answer this. I hope I'm audible, right?
Yes, sir.
Yes.
Yes, sir.
This leads us to some of the case laws. One of the case laws asks this particular question itself. If the share of members are determined in the case of house property, I inherited an house property along with my brothers. A person inherited a house property along with brothers, their individual shares are known. Their individual shares are known. Should that be taxable combinedly as AOP or treating them as individual, should it be taxed? Here are some of the case laws which are interesting in this. Govind Bhai Mamaya, the most repeated case. This is the example I was giving. 3 brothers inherited a property due to the death of their father. A part of this land is compulsorily acquired by the state government, which paid compensation and enhanced compensation. The issue under consideration is regard to the status which capital gain arising would be assessed. Assessee offered the income as individuals, but assessing officer sought it as AOP. But assessing officer treated them as AOP. Held by Supreme Court. Income earned by the assessee is not by carrying on of any business or profession. That the income from the asset inherited by the legal heirs is taxable in their individual hands. So in this case, we got the clarity. Only business income needs to be bifurcated, or business income needs to be taken as income of AOP. Other than business income, still I will tell you, other than business income, if the shares are indeterminate, then it will be taxable as AOP. Where the shares are determined, then it will be taxable only in their individual capacity. Look at this case. This case has 2 parts. Sudhir Nagpal. Rental income from plinth, in which head is taxable? Plinth is not house property. Plinth is not house property, so it is taxable under IFOS. Only if land and building opportunity thereto is there, it is taxable under house property. Further, would it be accessible in the hands of the co-owner, treating them as AOP or individually? In this case, the co-owner had inherited the property from their ancestors and there was nothing to show that they acted as AOP. Thus, the High Court held rental income received from plinth has to be assessed in their hands as individual and not considering them as AOP. Not considering them as AOP. So in these 2 cases, Govind Bhamaya and Sudhir Nagpal, we understood that if the individual shares are known, they will be more taxable as AOP and not as individual. So here, a house property located at Jaipur with a borrowed capital jointly shared and occupied by both of them self-residential, each one of them can claim 2 lakhs. When I go to house property, I will also tell you that section 23, 24, 25A tells about joint ownership. Section 25A, 26, sorry, 25A arrears of rent. 26 Section 26 tells about joint ownership. In the case of joint owner, each co-owner can claim the benefit of self-occupation. So this 4,10,000 can be split as 205, 205 and taxed. Read the question again. Prakash, a member of 2 AOPs, provides the first. First AOP is assessed at normal rates of taxation. So whatever Prakash receives becomes taxable. Whatever Prakash receives becomes taxable. Second AOP, you can claim the individual benefit. Hence, there is a provision available. Section 26 says each co-owner can claim the benefit of self-occupation and it is not a business income, so it is taxable only in their individual hands. Share of profit known equally. So NAV is nil. NAV of a self-occupied property is nil, less interest on borrowed capital, okay, actual, which is 2,05,000, okay, or maximum 2 lakhs, whichever is less, so 2 lakhs, okay, so 2 lakhs. Remember, loss from house property can be set off against any income. So this 2 lakhs can be set off against the share of profit of 7,26,000. In this case, tax will be nil because he doesn't have any other income. Tax will be nil. Everything will be available as a relief. That's what I meant.
Sir, I have a doubt actually. You said that salary commission or bonus paid by AOP to its members is disallowed. So it will be taxed there also, and here also it's taxed in the hands of individual.
I was waiting for someone to ask me that doubt. I will hold on to this doubt for some more time.
Okay. Thank you.
So 26,000 into 20%. 26,000 into 20% plus 12,500. $18,408 divided by 5,26,000 into 100 will give me the percentage. Okay, will give me the percentage, unfortunately, into 5,26,000. That is the dually taxed income also. 18,408 divided by 5,26,000 into 100 gives me the percentage. Okay, 5,26,000 into 3.5, okay, into 3.5 percentage. So the net tax will be nil because there is no other income. Had there been any other income, then it would have been different. Here there is no other income, so net tax is nil. Why are you not taking 7,26,000 and only taking 5,26,000, sir? Because income tax is only 526. Dually taxed income. You did not tax 726. You provided 2 lakhs deduction and taxed only 526. That's why I am taking 526. If AOP income is the only income of the assessee, nothing will be taxable. If assessee has some other income only, this computation has a logic. Otherwise, it does not have a logic. Only AOP will be taxable. our friend's question was, which I, sir, you said these two things will not be allowed in the hands of the AOP, which means AOP has already paid tax for that. But you are including it here and taxing. How is this? We are not clear. In partnership firm, you said whatever is allowed in the hands of the firm is only taxable in the hands of the partners. Applying the same logic, whatever is allowed in the hands of the AOP should only be taxable in the hands of the members. Interest on capital and remuneration would not have been allowed. 40BA says it is not allowed. But here you are taxing it. Are we making a mistake? I will clarify this doubt. I will clarify this doubt very soon.
Sir, can we take a 2 or 3 minute quick break, sir?
Sure.
Okay.
Sure. Okay. Shall we continue? I hope my voice is audible.
Yes, sir.
Yeah. We continue to the next question. T and Q are individuals who constitute an AOP sharing profits and losses 2:1. The profit and loss account is as under: cost of goods sold, remuneration to TQ employees, interest to TQ, other expenses, penalty, net profit, sales, dividend income, LTCG. Additional information. Other expenses include wristwatch costing 2,500 each given to 12 dealers who had exceeded the sales quota under a sales promotion scheme. Is it allowed as a deduction?
Business expenses, sir.
Business expense, genuine business expense. Employer's contribution to Provident Fund paid on 14th January 22. Allowed, my dear friends. Only if it is 23, it is not allowed. I think it was allowed, yeah. 30,000 paid in cash to an advertisement agency for publicity. Disallowed. It should have been GST penalty. Outstanding GST penalty was paid on 15th October. The penalty was imposed by the officer for non-filing of return and statements by due date. T and Q had income from other sources 3,60,000 and 2,32,000 respectively. Compute the total income of the AOP for AY and discuss the tax implication in the hands of the members. Read through. First, let us do the PGBP part, then come to the taxation part later. First, let us understand this question from the PGBP perspective of it. Computation of business income. Net profit or as per P&L account. Net profit as per P&L account 5,24,000 5 crore 24 lakh 30,000. It is in lakhs only, right? Figures in thousands, sorry. Figures in thousand, not in lakhs. Figures are in thousands. So it is 5,24,300. Remuneration to members 130 plus 170. Okay, 1,30,000 plus 1,70,000. Three lakh. Interest to members disallowed under 40BA. It is 48,300, 35,700. 48,300 plus 37,700. Penalty.
So the interest is 35.7, sir, not 37.1. 84,000.
So this advertisement of 30,000 is fully disallowed. Dividend income is taxable under IFOS. Dividend income will be taxable under IFOS, LTCG, business income 312,300, LTCG 640 and dividend income 25,000. Computation of tax. For a minute, all of you understand and then work out. Okay. Income of member T before share of profit is 3,60,000. Income of member Q, TQ, before share of profit is 2,32,000. One of the member is having income exceeding basic exemption limit. That is, member T is having income exceeding basic exemption limit. Hence, AOP is taxable at MMR. Hence, one of the member, okay, this member has an income exceeding basic exemption limit. So, AOP is taxable at MMR. 1 minute, my dear friends. Income taxable at special rates. That will never change. LTCG at 20%. That will never change. 6,40,000. That you cannot change. This you cannot change. Income taxable at 30%. Other income. Okay. So, please understand how this taxation works. This is interesting to understand. This is part of law. This is part of Finance Act. So, this will not change. This into 20%. This into 30%. But the fact is, add surcharge at 37%. Even for that LTCG, surcharge will be 37%. Even to that LTCG, surcharge will be at 37%. And HEC at 4% on tax plus surcharge. Okay, so where I am coming to in your understanding is this 20%. Suppose if there is winnings anyhow 30%, but any LTCG is there, please tax it at the special rate. Only the normal rates MMR will apply, but whatever it is, surcharge is computed on tax. So this is the way of working. Please write it in a manner you will understand in your notebook. Are you clear? Are you clear? I want to go to the next step, so I want you to write the step neatly so that I can go to the next step. Statement of distribution of share of profit. I know it is exempt, but if it is taxable, how to? Statement of distribution of share of profit. Particulars, Mr. T, Mr. Q. Statement of distribution of share of profit. Total income to be distributed. We all know total income to be distributed is 9,77,300. Total income to be distributed 9,77,300. Look at how I am distributing. First to the extent of remuneration. First to the extent of their remuneration I will distribute. Okay. 1,30,000, 1,70,000. 1,30,000, 1,70,000. Next to the extent of their interest. Next to the extent of their interest. 48,300, 48,300, 35,700. 48,300, 35,700. Balance in their profit sharing ratio. In their profit sharing ratio. Okay. How much is the balance? Balance is 977,300 minus 3 lakhs minus 84,000. 593,300. Okay. 593,300 in the ratio of 2:1. In the ratio of 2:1. 593,300 divided by 3 into 2. 593,300 minus this. Okay, my dear friends, okay, share of profit distributed. Okay, there is a distribution criteria also. Though remuneration is disallowed, etc., but at the time of distribution, they are distributing it like this. That is what, 1 minute, that is what I was holding it back from you. Okay, I was holding it back so that practically you can understand. Share of profit to members, its distribution. The net income of AOP BOI computed in the manner shall be distributed. First to the extent of interest, salary, bonus which they are eligible. However, it is disallowed, accepted, but it will be distributed. Balance in their profit sharing ratio. Okay, that is why in this question you found out that there he has been credited with 210 interest on capital, 496 salary, but I included it as share of profit because it is just distribution. These would have been disallowed, no doubt about it, but this is share of profit distributed as salary, share of profit distributed as interest, share of profit distributed as profit. In AOP, the method of distribution is slightly different from other things. In AOP, the method of distribution is first to the extent of interest salary, because partners might take the interest salary in different proportion and balance in their PSR. This is distribution of their share of profit. Names are different, it is share of profit only. So that's why in this question we are distributing it as first to the extent of remuneration, then to the extent of interest, and balance if any in the ratio of their profit sharing. Write down.
Sir, so the Income Tax Act says that I will tax AOP only in this manner, even if they are giving remuneration before arriving at the profit.
Correct.
Okay, sir.
This is for ensuring that I am doing justice to the members. Probably Mr. Q is working more than Mr. T. That's why he is getting more remuneration, less profit share. T has contributed more capital. That's why his profit is more. So while distributing, I ensure that I am distributing in the same ratio they wanted to. But I would have disallowed this while computation.
Okay, sir.
Sir, is there any chance that while we are distributing the profit as per remuneration and interest, the profit itself will get depleted before that?
Suppose your question is, I understand this as, suppose this is not 977,300, this is less than 3,84,000.
Yes.
Yeah. So first you will distribute it to the extent of remuneration. Then whatever is the balance in this ratio of 48.3 is to 35.7.
Okay.
Suppose this itself is less than 3 lakhs. You will distribute it in 13:17 ratio.
Okay.
Question as asked, discuss the tax implications in the hands of the individual. Yeah, this is the tax. Okay, share of profit distributed. However, this is exempt in the hands of partner members, sorry, as the AOP is already taxed at MMR. Okay. I want to take this opportunity to clarify one more point here. Income of member T 360, he will not pay any tax because rebate will take care of it. Rebate will take care of it. But AOP is taxable at MMR. The law has not said where any member pays tax. Law has not said so. Where any member has income exceeding basic exemption limit. Income has exceeded basic exemption limit. Probably is not paying any tax. That is different. but income has exceeded basic exemption limit, so AOP will taxable at MMR and share of profit exempt. Nowhere we should get confused that I am talking about paying tax. No, I am talking only about increase in income. Okay. Having said all these things, the J and K is the only question. The first question which we worked out is the only question I have seen in AOP as a standalone question. Sometimes in company, they will give share of profit of AOP. Sometimes in an individual's case, they will give share of profit of AOP. So as an individual, you might be working out tax. But AOP as a standalone question, so far, I have only seen J and K. Okay, that Prakash and Akash is our co-professional group examination question, and this is a different question. This is a framed question. Okay, otherwise I have not seen standalone questions on AOP at all. I have not seen standalone questions on AOP. So this is with regard to taxation of AOP BOI, but for all practical purpose they will be treated as firm. So only 40 BA is the differential. What do I mean by for all practical purpose they will be treated as firm? Residential status is as per firm. Assessment procedures, AOP's members are jointly and severally liable. Any tax due even from one member I will be collecting. So assessment procedures are the same. Okay. And dissolution of AOP BOI will become taxable as much as dissolution of a firm. So majority of the firm's provision only are applicable except 40 BA, where I am going to say that you cannot pay remuneration or interest. You cannot pay whatever remuneration and interest on capital paid shall be disallowed in computation. Okay, this is the working for AOP. All right, and the two case laws, Govind Mamaya and Sudhir Nagpal, both are questioned in the past years. Both are actually, it is not that the case laws are not questioned. Both case laws were questioned in the past years. In fact, all the four case laws which are here are already questioned. Great City Manufacturing, Anil Hardware, Govind Mamaya and Sudhir Nagpal. All the four case laws that is there are already also questioned. Okay, and you can see Govind Mamaya is a Supreme Court judgment, so all the more gets importance. Okay. I'm not going into the fresh area now because already there are so many disturbances here to get the class going. Okay, because of rains I couldn't go to institute and there are so many disturbances here. So other area, that is the next area, we will go tomorrow morning at 6 o'clock. If rain is not there, I want to start the physical aspect of next area, but whatever it is, tomorrow morning at 6 o'clock. 1 minute, please wait.